Welcome everybody to another 144 analytics video where we show you how to use the Fibonacci retracements with the 144 analytics rules and guidelines. In this one here, we're going to start with the Dees oil because this is where we soybean oil. This is where we left you in our last video when the market was down here at 78.6 here. And we said that holding this thing and after coming off a 23% retracement and not making a new low, that there's holding this level can turn this market into a new bull market. As we always say, 78.6 can be the start of and end a lot of bull markets. In this case here, you could see it up on top, and this we covered in the last video how it ended that bull run, and then how we're starting one here, or that's what we were claiming, or not claiming, but just saying could happen here from this level. As we go back and we look out what happened from there, you can see it held it perfectly and a new run started. It took out the 23%. And then here's how we always follow it, is that any market that's going to have a trend, just as it did here, it stayed under 38.2, under 38.2, under 38.2, that then here again, it stayed under it, or now, that's what we're looking for as our target, but you can see here we start following it underneath. And in this case, the first setback came right to 38.2%. Here we just, to show you first off, that was your 78 down here. And then we took this one up to here, down to here, 38.2%, meaning the market should go for new highs, and it has. And just following all the rules, this is our target for the time being. And then we'll see how the market reacts from that. These are just the guidelines, rules and guidelines we give for every market, and we want you to understand that these are for every market and the same rules. So the next thing I'm going to show you here is the crude oil, and we get into here, and they just did the same thing that the soybean oil did, in that they held a 78.6 retracement, coming off from a 38.2 back up to the high. Normally you'd be looking for a new low, but anytime you get that, as we just said, 78.6 is where a lot of bull markets start and end. And in this case, you can see what 61.8 will do is send you 61.8 the other way. 61.8 can cause a lot of wide swings, just as 78.6 can too. Thing I should mention is about the 78.6 rule, the first target within when you hold a 78.6 is that it should go 78.6 of where it just came from. So if we just look at this and we just say that this thing went from here to here, held, well, it closed under it. We can always close one time or plunge under it, but it's always that next day that's got to be right back above it. So as you can see, it was 78.6 down there, so we would be looking for 78.6 back up. That's all it could do. We could have thought that, or we would have thought that this could possibly be the next bull move here, but as always, we watch every retracement on every move to make sure, or to understand exactly just how weak or strong the market is. So you don't just blindly say just because it went 38 back, it has to make new lows and you're staying with it until it does. That's a big mistake. You have to watch and see what other retracements the market is reacting to. So right now we had this 78.6, and since we already reacted here, we're not looking for that to stop the market, but we look for the next bigger retracement, and this is on the continuation chart, 38.2 back up. This is the long-term swing point, as we like to call it, and you also have a Gann square here. So if we were to hit up here, get back under the Gann square, you could see this market come back. Again, we're going to follow this market and see if it can hold. Any setback that holds 38.2 tells us the market's in a very good shape and the trend has been established and changed. So watch for that. And with any new high, you'll just retrace it back to this low down here to make sure. And you'll also watch 23.6% because that's a market that's extremely strong or weak when it can't get above or below those levels. And we'll show you that next. And again, just going into where this is in every single market, we're going to go to the cattle here, and you can just see where all of these retracements are and what they did, and you can see the plunges under it, and these are where the markets are turning, right at these 78.6, 61.8. So this 78 took its 78 the other way, and we stayed up here for a few months before coming off, but once it did, you can see that it held 38% back up here to this high, 38%, saying it should go for new lows, and it did, and in this case keeping the market negative. So we take it the same high with the next low. What do we have? 38.2 right here, hits exactly again, and then it goes to 78.6. It doesn't make that new low. It didn't take out this low, plunged down under it. But again, as we just said, it's the close that matters. So the initial target was just, 78% back from here to here. Did that, and indeed it did turn this market into the next bull leg. And it went through 38, through 61, and now hit 78.6. So what we're going to watch here, from here, as we mentioned before, 78.6 is the target on a break from here. And again, you're going to watch all the retracements on here to see just how weak or strong this thing is. And if it holds 23%, then this thing's still just going for more. And we have another thing up here where we have the Gann square and a 78.6 on the continuation chart up around the 192 area. And so that will be the target if this thing. So you can use this as a swing point, this level, 187.70. And we're looking longer term down here. Short term would be 38%. And again, holding 23% would mean this market's really strong. And it's got more to go on the upside, where we'll just show you what happened here in the Hogs, just on how strong a market is. So you have here where this market had the bottom, came back, didn't make the new low right at 78.6. So again, as we said, the initial target would be just 78.6 back up right here. It got that, and as you can see, it was truly the turn in the bull market, or turned it into a new bull market. And this is one of my personal favorites for the quickest move and the biggest moves. A lot of will come from like 78.6, and obviously 38 is the most important as far as keeping a trend intact. But as you can see here, this market, just once it did turn, how strong it was, because each setback was only able to get to 23%, meaning the market still is very strong. So you sit on here, so you can see where these lows and highs are happening, are right at these levels again. So we make a new high. Where do we come back to? But right here, 23% again, and up off into the 78.6, which we hit. That's all it could do. We're still going to watch this 78.6 level here, because to get right back under it on Monday or that, and next day or so, we wouldn't want to see many days above here, but still, it's a long-term retracement. So if they take out this 78.6, get down to it, we will be looking for a move that goes 78.6 the other way, down around 165. But again, we're going to watch the first target would be 38%, 71. And again, we'll draw, and you should too, this retracement from here to this new high. Happens to be 73.40 is 23%, and that's also the previous major Gann square. So holding this area right here would be extremely positive sign, and anything that goes high, and we'd be looking for new highs. And in this case here, we'll be looking at, if it fails to turn down from here, we'll be looking right up here into this 61.8 on the continuation chart, around 80.40, and then the 80.78 major Gann square up above is our next target up there, provided we don't turn from here. Now, as we've said many times, we do all these videos so you get an understanding and you understand why we believe that the Fibonacci retracements are the underlying structure of all markets. We are starting a new a new email service, just sending out some updates on gold, oil, and the S&P 500. You'll see a link down below for that if you're interested in getting that ahead of time, these levels. And that's a free one for right now. And if you do trade the grains and livestock, we'd love to see you become a premium member where you get all of these levels and well ahead of time. And as we like to say, we want you to understand why we think what we think, to give you more confidence and understand our rules and guidelines so that you can do this in any market at all. So until our next video, best with your trading.